Morning. I forgot to put on a different shirt. Good morning, welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life, and today we have a bunch of Ethereum stuff to talk about. You know, lots is going on in the market though too. We do see, of course, this big crash coming in, apparently from the minutes that we reported on yesterday from the FOMC, and I'm actually a little surprised by that. We'll get into why later on in the show. But in addition to that, basically we have the Ethereum Classic hash rate definitely taking a huge pump up from all of the Asics, specifically the A10s coming off of the Ethereum network. So we have basically hash rate coming off of Ethereum and onto Ethereum Classic. It hasn't been a ton yet. There's about an additional 10 terahash or so on the network, but we're going to be talking about it, talking about the A10, and then kind of getting an idea of how many people are still waiting for their firmware updates for the A10s. It seems like, to me, a lot of people aren't as prepared as I would have expected them to be for the transition to Ethereum Classic on these A10s. I would highly encourage you as a GPU miner or even an ASIC miner that's on Ethereum right now to get yourself prepared, because the people that have their A10s on Ethereum Classic right now are probably getting a little bit of that preparedness advantage, that first mover advantage on the Ethereum Classic network. So make sure you got yourself prepared to hit whatever coin is going to be available once we go through the merge. You don't want to be caught with your pants down trying to modify all your flight sheets and your overclocks and everything at last minute, because you're going to lose that first mover advantage. We also have House lawmakers sending letters to 4 US crypto miners asking for details on environmental impact. And why is the market crashing? We're going to be talking about that too. And the GPU price crash is also happening, with 6700 XTs dropping pretty significantly below $400 US a pop. Let's get into all of that and more right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. And welcome back, everybody. So first things first, pretty big news. We have a new listing for Kaspa on TradeOgre. Now, this one is a little bit surprising. I didn't expect this to actually happen, but boom, here we go. As you guys can see, we have Kaspa listed on TradeOgre. So right now, Kaspa is down a little bit, which is pretty good news. If you want to go over to TradeOgre and pick some up, you can get it relatively cheap. I think if you're over on TextBit, it's back up probably over 0.003. They're bouncing between each other, so there's a little bit of trade arbitrage going between the two, which appears that people are basically purchasing for the cheaper price on one and then go list it on the other one for a little bit higher. And this is going back and forth between a few of the different exchanges for Kaspa right now. The volume across the board, though, is still relatively low, to where You know, the price fluctuation is pretty insane between 0.0027 and 0.0036, I think is the highest I saw today already this morning. So it is all over the place, but pay attention to what's happening with Caspa. And if you wanted a non-KYC option other than Exhibitron, you now have Trade Ogre, which is a pretty popular one. So you got your KYC version on TextBit, of course, and then you got your Exhibitron and your Trade Ogre here as well for your non-KYC options. And so all of it's pretty awesome because it is also paired with USDT, which is a pretty good pairing to have as far as being able to tell what the price of it is going to be and all of that. I would expect now that it's on Trade Ogre to start possibly seeing a what to mine listing soon. And once we get the what to mine listing, I think you may be surprised with what you're going to see. So keep your eyes open right now on this coin, especially from the GPU mining perspective. Thanks for the $2 super sticker, boosting the algorithm, Mr. Rolo Rob. Or is it Royo Rob in Espanol? All right, so other than that, we have GPU prices crashing, which is good news if you're looking at purchasing GPUs. GPU price crash is making it hard for AIBs to offload AMD Radeon graphics cards too. The RX 6700 XT drops below $400, and the 6600 has dropped below $260. It's not just NVIDIA that has been hurt by the GPU price crash, but AIBs are now having a difficult time offloading their AMD Radeon RX 6000 cards too. A report from graphics card channel dealers published by MyDrivers states that Asus, Gigabyte, and MSI are having a difficult time trying to convince retailers and distributors to buy Radeon RX 6000 series cards for sale in the consumer segment. The reason is just like NVIDIA GPUs, which saw a huge price jump during the mining boom, but pricing has now plummeted heavily. AMD Radeon RX 6000 series graphics cards priced have plummeted even worse than NVIDIA GPUs, and there's little to no demand for gaming cards right now. In its most recent earnings, Q2 2022, AMD confirmed that their discrete graphics side has seen a decline, and while the revenue of the division increased by 32%, it was mostly due to strong growth in the semi-custom business, which includes console SoCs for Microsoft's Xbox and Sony PlayStation platforms, as well as, to be frank with you guys, the Steam Deck, which is obviously in that bucket as well. So revenue increased 32% year over year for $1.7 billion as semi-custom growth more than offset a decline in gaming graphics sales. Gaming graphics declined in the quarter as macro conditions impacted discretionary spending. And that is going to obviously be a problem there. But also we have to talk about the gaming industry in general not being that enticing as of late. We've been talking about this on the channel too recently, where, you know, the fact of the matter is there's not a huge amount of games that are coming out that are really enticing and make you want to go out and build a new PC. But on top of that, with the decline of the economy, it doesn't make a whole lot of sense to go out and purchase a gaming PC because people are trying to, well, fill their gas tanks as the price of gas and energy costs continue to rise. I would say that as we entered this year, we were coming off a very strong 2021 for consumer graphics, where gaming demand was very high. We have seen a slowdown here in the second quarter, and we expect that is somewhat due to a sort of demand now, sort of the supply now, and more supply versus demand, as well as some of the macro issues as it relates to consumer spending. That was AMD's CEO, Dr. Lisa Su. As a result, AMD exclusive AIB partners such as Sapphire have already officially announced a drop in prices for their premium RX 6000 series graphics cards. It is reported by IT Home that the Sapphire RX 6700 XT has dropped to a price of around 2,999 won, originally priced at 3,699 won. That's an almost 20% drop, and 543 US versus $440 US. The manufacturer has also planned similar price drops on the rest of its high end and also lower end products. You can see here a listing on Newegg for $415 and after rebate $395. Now, this is for the ASRock version. I wouldn't recommend the ASRock Challenger version necessarily, but you know, that is there. We also have, let's see, a listing of the RX 6600 here for $259. And then finally, let's take a look at the last one here, the 6650 XT. I would get the 6600, obviously, over the 6650 XT, but this one is $349. However, these are manufacturer-specific price cuts. On the retailer side of things, we can already see AMD's graphics card prices being lowered almost every day. As of writing this piece, an ASRock Radeon RX 6600 XT Challenger graphics card is already on sale for for whatever, almost $100 reduction from its original MSRP. While the 6600 that had an MSRP of $329 can now be bought for as little as even the new 6650 XT launched at $399 just a few months ago has dropped down too. You can also get up to $80 US savings on the MSI 6750 XT, which is currently retailing for, well, apparently they're not even putting these prices in here. They're like retailing for a blank price, $549, but was the original. It's not listed up here either, so I have to go look it up. The thing is that these AMD Radeon RX 6000 series graphics cards are priced lower than their rivaling NVIDIA GPUs. The 6600 series was made to compete with the RTX 3060 series, and you can already see a $100 to $150 US price difference here. The 3060 series starts at $350, while the 6600 series starts at $260. The same is the case with the 6700 series, which now starts below $480 US, but its competition, the 3070, is selling for $550 US and above. The major price difference in the same segment is once again pointing out that while NVIDIA GPUs are still in demand, albeit much lower than last year, the Radeon side has fallen drastically. And of course, this does come down to a little bit of the mining aspect of it. So as you know, the 3070s and the 3060s, and well, at least the 3060 Ti's, are in higher demand on the mining side of things too, because people are kind of consolidating and trying to prepare as best as possible. And you find that the 3070 and the 3060 Ti really get you in that sweet spot of being prepared for post-merge mining, where it does perform well on other algorithms like Flux, etc. And so you don't see that as much with the 6000 series, but you know, there is probably going to be an argument here from the mining side to pick up some of these 6600s as cheap as they are getting. Finally, there's also a new deal on the GeForce RTX 3080 Ti graphics card. An MSI Ventus 3X overclock variant is currently going for a low price of, well, up here, $844 after rebate, which is a 30% drop in the MSRP, which was $1199. So this is getting pretty crazy. You know, we've been talking about, well, what happens with the shortages and the new launches. And did maybe Jay's 2 cents know something that we didn't know? We saw the shutdown of manufacturing in Sichuan for this week. And we're kind of in a position where it's like, well, if we look at the market, it looks like GPU prices are continuing to come down. But is there going to be a shortage problem later on? Now, the shortage problem could end up being just on the RTX 4000 series and the RX 7000 series, which would end up being an interesting turn of events. And then you still have a flooded market with the old gen GPUs. The gaming demand is down. I think, like I said before, revenue for gaming this year is down 60%, which is quite high. And so that's not really going to make up for it. And then with the merge coming on Ethereum and the decreased demand in the mining segment, at least the home mining segment, I think that there will be a ton of opportunity to pick up a lot of cards for pretty cheap. We also saw, some pictures floating around from different mining farms that are prepping a whole bunch of cards to hit the used market. So be prepared for all of that to be coming to fruition, and have your, I guess, whatever cash positions you have ready if you find a good deal. Of course, that's not financial advice. It's just make sure you're ready, right? If that's your plan. So the crypto market is crashing though today, and we have a little bit of an overview of why that is happening. Now, yesterday we talked about kind of why it was happening, which was essentially the FOMC's reports, but we didn't actually get an interest rate hike. So it's kind of interesting that that hasn't come into play yet, and we're already starting to see the market react. Now, this could be similar to what happened previously, where we were expecting a 100 BPS hike, and the crypto market took a dip, and then we had a 75 BPS hike, and then they went ahead and the crypto market returned a little bit and recovered. It could be just a quick cyclical repeat of what happened just here recently. But, what they're saying, pretty much falls in line with this. Just when investors thought that the markets were in recovery mode, the markets gave out a reality check. The cryptocurrency market is crashing today as leading cryptos are down double digits. There's still fear and panic as most of the cryptos shed the gains they generated last week. The crypto markets have continually been trading one step forward and two steps back in 2022, and today's crash is no different. Bitcoin plummeted near 8% on Friday, while Ethereum is down 5% and is expected to head south further. In the last 24 hours, $550 million worth of cryptocurrencies have been liquidated from the markets. The overall crypto market cap is down nearly 7% and is standing at $1.09 trillion. The liquidation numbers are expected to fall further as Bitcoin is down on a downward spiral. But why is this happening? The markets reacted to the FOMC meeting minutes as reports state that the Fed plans more interest hikes to tame inflation. The U.S. Central Bank has not explicitly revealed the upcoming interest rate hikes publicly. However, the minutes meeting suggests the policymakers are committed to raising the interest rates again. Now, once again, though, we were kind of expecting this. Like I said, after we had the CPI report, it was clear that what they were going to do was at minimum a 50 BPS hike. We were expecting a minimum of 75, but then they kind of quelled some, I guess, worry surrounding that by saying it would more than likely be 50 BPS. I'm thinking it'll probably be that 50, and then we'll see a slight recovery of the crypto market, but it's not financial advice, and I don't really know, because I didn't really expect personally this to actually affect the market as much as it did, seeing that it's mostly rumor and nothing has actually been implemented at this point. So the policymakers agreed that inflation rates did not subsidize despite their previous attempts to tame inflation. Participants agreed that there was little evidence to date that inflation pressures were subsiding. Therefore, there are higher chances that the Feds might increase interest rates again in September. The decision will be confirmed in the next minutes meeting on September 20th and 21st. It is reported that the Feds plan to double the rate of balance sheet shrinkage in September. However, the report is not confirmed until the Feds announce the next interest rate hike. The FOMC meeting was held on Wednesday, and the markets lost their cool after the release of the minutes. The cryptocurrency markets are crashing today. Here's what the FOMC meeting minutes read. Members agreed that in assessing the appropriate stance of monetary policy, they would continue to monitor the implications of incoming information for the economic outlook, and that they would be prepared to adjust the stance of monetary policy as appropriate in the events that risks emerged that could impede the attainment of the committee's goals. I think overall, in general, we're going to head into a downturn. That hasn't really changed. I think that 2023 will be one of the roughest years that we've seen in quite some time. I thought, we would have a little bit more recovery going into midterm elections. That could still be true, of course, in September, depending on, what they decide to do with raising the interest rates and how high they raise them. And if they get that in line to tamper down inflation just before the midterm elections to hopefully influence voters to vote in the way that they hope that they will vote, whichever way, you know, the policymakers decide that they want them to vote, right? But that could not be, or that could end up not being the case if we continue to see greater like macroeconomic influences, like, you know, whatever, the war in Russia and Ukraine, everything going on with China and Taiwan, and even just China in general with the shutdown of a lot of manufacturing because of the summer. A lot of this stuff could influence it and make it basically impossible for them to, I guess, manipulate the market for the midterms, for lack of a better term there. But we have more stuff going on too, because while we are dealing with essentially out of control inflation, and we're dealing with huge economic crises and pending wars and so on, it doesn't matter. The government still wants to come down on crypto miners for environmental impact. House lawmakers send letters to 4 U.S. crypto miners asking for details on environmental impact. Core Scientific, Riot Blockchain, Marathon Digital, and Stronghold Digital received letters from members of the Committee on Energy and Commerce. 4 publicly traded crypto miners received letters from the U.S. House members of the Committee on Energy and Commerce looking to learn more about the impact of their mining operations on the environment. Core Scientific, Riot Blockchain, and Marathon Digital, 3 of the largest U.S. miners, as well as the smaller Stronghold Digital, received the letters that were signed by Committee Chair Frank Pallone, who was a Democrat from New Jersey, Bobby Rush, who is a Democrat from Illinois, Diana DeGette, I believe, who is a Democrat from Colorado, and Paul Tonko, who is a Democrat from New York. Quote, blockchain technology holds immense promise, and that may make our personal information more secure and economy more efficient, end quote, the letter said. However, the energy consumption and hardware required to support proof-of-work-based currencies may, in some instances, produce several externalities in the form of harmful emissions and excess electronic waste, or e-waste. You know what's waste? Is when you burn off flare gas to release pressure in the pipes and you don't have a way to actually utilize that. It's more harmful on the economy. If you are generating power and not utilizing it, you are wasting that power. That's waste. The letters come amid heightened scrutiny by lawmakers of the environmental impact of crypto mining. Most recently, in a letter sent to the U.S. Environmental Protection Agency and the Department of Energy, 6 Democrats led by Representative Jared Huffman, who is the Democrat from California, and Senator Elizabeth Warren, who is a Democrat from Massachusetts, called the amount of energy used by miners disturbing and requested that the 2 groups required more reporting on emissions and energy consumption from the crypto mining industry. The latest letter acknowledges that some miners are mitigating their need of excess amounts of energy by investing in renewable sources of power. However, they argued that some of the largest crypto mining companies in the country are still primarily relying on the electrical grid for their power, which can increase peak demand and potentially incentivize new fossil fuel generations. But the thing is if you set the incentives properly, which they are already set properly at this point, and the incentives are aligned in general with renewable energy, miners are going to move to renewable energy. We're already seeing that happen. Or other forms of energy that are going to reduce waste of energy. This entire argument is extremely annoying. And yes, I am stating exactly the party affiliation and who these people are that are calling for these types of basically audits of, I suppose, the mining industry's power usage and power consumption. So you guys are aware of who they are, what party they are aligned with, and what goals they have in mind that may or may not align with your goals, and then you can make your voting decisions accordingly. All right, that's all. It is what it is. Ethereum decentralization at great risk as Amazon hosts 52% of all nodes at data centers. This is a report from Asari. Crypto analytics portal Masari released a study that showed that of 65% of Ethereum nodes located in centralized data centers, 2/3 of them come from 3 major data providers of web services. Thus, Hetzner, OVH, and Amazon Web Services account for 69% of all nodes located in data centers. Moreover, Amazon's combined share here is 53.7%. Crypto needs to decentralize. 3 major cloud providers are responsible for 69% of the 65% of Ethereum nodes hosted in data centers. Of the estimated 95% of Solana nodes hosted in data centers, 72% are hosted with the same cloud providers as Ethereum. According to the source, roughly 95% of all Solana nodes were hosted in data centers, and interestingly, 72% of them are also hosted by those 3 web service providers listed above. That said, Solana nodders seem to place more emphasis on Hetzner, which holds 42% of all centralized blockchain nodes. Amazon Web Services, on the other hand, holds less than 3% of Solana's nodes. The report raises the question of whether Amazon could somehow manipulate Ethereum, given the centralization of 1,487 of the 4,653 active nodes in its hands. More interesting would be to see if Jeff Bezos would be able to knock out most DeFi applications on Ethereum if he wanted to. And the thing is yes, they can. We've talked about this before. What do they do when somebody gets out of line and they don't agree with them? They shut them down. This has happened with Parler. This now is a threat to cryptocurrency thanks to the move to proof of stake from Ethereum. And, frankly, obviously you have the same problem on Solana, and Solana hasn't been handling that very well because we've gone down over 7 times with Solana this year already. And the idea that anybody is still invested in that company is just absolutely baffling to me. It is worth noting that it is an extremely good time to release such a breakdown when today Vitalik Buterin, the founder of Ethereum himself, launched a verbal attack on XRP. Vitalik said that the cryptocurrency has lost its right to protection without explaining who should protect it. However, if Ethereum itself has such a right to protection, then the crypto world probably should not worry about seemingly excessive concentration of nodes in the hands of one web service provider. I mean, we all knew this. We've been talking about this for years. It's so weird to see all of it come into fruition and places start to finally report on it when we've been screaming this from the rooftops for years, that this would be a problem, this would be a centralization issue, and that if you are basically centralized within one of the 3 main cloud services, that you put yourself in a position to be compromised with your from the perspective of being decentralized or centralized, right? And the thing is at the end of the day, if they just decide to go through a sweeping crypto ban across all data centers for Amazon and Microsoft and Google, all of these nodes will get shut down. And the concentration is only going to increase because the thing is people need their 24/7 basically support and uptime from essentially these cloud services to keep their nodes up all the time, because if they're maintaining them themselves, they risk, of course, downtime. And if you risk downtime with proof of stake, well, it's the same as mining, right? You lose money, and nobody really wants to lose money, especially when the margins on proof of stake are so low. Now, more stuff's coming out on Ethereum. We're starting to get a little bit of some hints surrounding what's going to happen post-merge. And that is thanks to, of course, the DAG growth on Ethereum going over 5 gigabytes. And initially, I thought it wouldn't have that much of an impact. However, I was wrong, because we are seeing a lot of A10s deployed, more than I was expecting, which actually bodes well for GPU miners, I think, at the end of the day. But like the title says, I don't think you should be mining Ethereum Classic right now, because what we are going to see is an increase of the hash rate, and we are seeing a downturn in the crypto market, meaning that the hash rate's going up, but the price of Ethereum Classic is going down. And we don't have any price discovery yet on Ethereum Classic. Now, in theory, you would start to have price discovery once there is more security on there, but that will have to stabilize, and the miners will actually have to have the coins that they're generating in hand to start influencing price. At this time, they do not have the cryptocurrency in hand to start influencing price. So right now, your daily revenue would look pretty bad over the next couple weeks while this happens if you were to mine Ethereum Classic, and that's kind of the idea behind this. But Silicon A10 stopped mining Ethereum, and here are the possible solutions. Recently, all Silicon A10 ASIC owners reported problems with the Ethereum mining. This happened when the Ethereum DAG file size reached 5 gigabytes. No matter how much memory the ASIC has, 5 gigabytes, 6 gigabytes, 7 gigabytes, or 8 gigabytes, all of them fail to work right now. And this was something new that I didn't know. It's not just that the 5 gigabyte A10s went offline, but apparently all of them went offline. So do they need firmware patches to continue to mine Ethereum, or do they all have to get firmware patches and default over to ETC? Let's learn more on all of this. In this post, we talk about the causes of this incident and possible solutions. Ethereum has a special DAG file that is loaded to the GPU and ASIC memory before the mining process starts. We described it in detail how this works in our when will my graphics card stop mining Ether. DAG file size is always growing. You could always find the current DAG size on 2Miners Ethereum pool main page. On August 17th, the DAG file for ETH reached 5 gigabytes. Most likely, this was the last important milestone for the Ethereum DAG file, and it will never reach the next one, 6 gigabytes, provided, of course, the merge goes through smoothly. Ethereum devs plan to change the consensus mechanism from proof of work to proof of stake in September, which will end Ethereum mining in general. A10 is a popular Ethereum ASIC miner produced by Silicon. Originally, it was mining only Ethereum and other ETH hash coins. Recently, the manufacturer released the firmware that allows also Ethereum Classic mining, bearing in mind the future end of Ethereum mining. ETC is slightly different from ETH as it uses its own ETC hash algorithm. More information on the new firmware could be found in their last post. So you have all of these here and the firmware updates, etc. The new ETC firmware could not be used to mine ETH and vice versa. It is not possible to mine ETC with the old ETH firmware. Ethereum mining is currently more profitable than Ethereum Classic mining, so many ASIC owners preferred to mine ETH and not to update to the new firmware to mine ETC. So that's why. And that was the question I had. But I still wonder why you wouldn't be extremely prepared in the fact that you would have those ready, but it will take time for all of those to get deployed depending on how big these mining farms are, and how robust their internal networks are as well, right? No matter how much memory they had. So as soon as the Ethereum DAG file reached 5 gigabytes, all the Silicon A10 stopped working, no matter how much memory they had. It looks like a firmware bug. However, it could be related to the hardware configuration as well. Unfortunately, Silicon has not released any information about this matter. Their Twitter account is almost dead, and this is absolutely insane. One of the reasons why, we do stick to GPU mining is that a lot of these ASIC companies have terrible support, terrible build quality, and in general are unreliable. And if you have a problem with one of your ASIC miners, it's going to take you years to get it repaired sometimes, and forever to get any sort of support. At least in my experience, it's been extremely difficult unless you have some sort of third party that's helping you out, like BT Miners is definitely helpful, as well as Coastal Crypto. But, you end up in this position where you don't have a way to get these working at all if you, at least on Ethereum, even if you were thinking ahead and purchased the models that had larger memory allocation to them. So, that's a real downer. If you were running an A10 and you purchased the 8 gigabyte model, so you didn't have to worry about the DAG, but now due to a bug, you have to worry about the DAG, and you only have presumably less than a month left to mine Ethereum which is most profitable right now, and you're stuck basically not able to do anything except presumably move to ETC, but you got to get the firmware file, you got to get that loaded and get going. Lucky owners of the Inosilicon A11 could still continue Ethereum mining. It seems this device uses a different firmware. Hopefully there are solutions you could use to still generate some profit with Inosilicon A10 Asics. There are other coins that use ETH hash algo that have smaller DAG file. There is also the ETC firmware available. Let's have a look at the CryptoCalc.com mining calculator and enter the 700 mega hash rate for both ETH hash and ETC hash. And as you guys can see here, Ethereum is at 1922 a day, Ethereum Classic at 1364 a day, Metaverse at $6.63 a day, and Callisto at 635 a day. MOAC way down there at $1.13 a day. Ethereum is the most profitable, obviously, and followed by Ethereum Classic. You could not mine ETP with the Inosilicon A10, so the next option is Callisto at 635 a day. You should not take into account Expanse, as this coin is trading volume is very little. So the worst option, just wait. We all hope that Inosilicon developers release new firmware that fixes the Ethereum mining issues soon. If you're afraid of firmware updates, and if you hope that the A10 issue is software related, and if you hope that Inosilicon devs could fix that, then you should just turn off your devices for a couple days. So many ifs, but who knows? And really, at the end of the day, you're probably going to have a firmware flash no matter what to fix this. So in the interim, so you're not down, if I had an A10, I would be flashing it to the ETC firmware and then flashing it back to the firmware that fixes it for Ethereum if that comes this week or whatever. But it doesn't look like this is coming. So it looks like your best option, as they state here, is mining Ethereum Classic. The new Inosilicon ETC firmware works just great. Flash it to your A10 device and start mining Ethereum Classic right now. You can download the firmware on the official project support website. Here's the ETC mining settings that they give you for 2 miners. You can also use other ETC pools if you wish, but this is obviously an article and blog post written by 2 miners. The second best option is Callisto mining. You could switch your A10 to Clo mining pool. You would earn much less, but you would still be earning something. Then you could wait some time again and hope that Inosilicon developers could fix the problem and release the updated firmware in the nearest time. And you could find those settings below. How many Inosilicon A10 devices are there? And that's the question. Let's have a look at the Ethereum hash rate chart. And as you see, the ETH network hash rate fluctuations are quite high. It's hard to say how much of the hash rate dropped when the DAG file reached 5 gigabytes. We could say that it was at least 30 terahash. There are 500 megahash and 720 megahash versions, so we could assume that there were at least 55,000 to 60,000 Inosilicon A10 miners on the network. And that means, of course, what we're going to see is, let's now check the network hash rates on Ethereum Classic and Callisto. The Ethereum network hash rate growth has more than 10 terahash in one day, while the Callisto network grew just 20 gigahash up. So what we're more than likely going to see is a potential for at least another 20 terahash to go onto the Ethereum Classic network. What this means is that from before the time the DAG was 5 gigabytes to after the time was 5 gigabytes, that we would see a total of a doubling of the hash rate on Ethereum Classic. What does this mean? Well, this means that either everybody that's on GPUs that's been mining it for a while at that 30 terahash, maybe 20 terahash of those fall off, right? And the GPUs move to mining something different in the interim, or the price of Ethereum Classic has to follow to go along with that, basically doubling in price. And both of those situations are, well, I would find the former situation to be more likely than the latter. The question is how many ASIC miners were already on Ethereum Classic? We know we have like the iPolo V1 minis. We have some stuff like that, or V1 Classics, excuse me. We have some stuff like that, plus older 4 gigabyte ASICs that are probably on Ethereum Classic already. How much of the Ethereum Classic network is actually GPUs at this time, or was it around the 30 terahash phase? And that's kind of the question that I have as well. So at the end of the day, I think if you're on GPUs, you're best served to start looking for different projects because you have that ability to do so until price discovery from the ASICs starts to come into fruition. Now, obviously, this requires some time because not only do we have to wait on all the A10s to essentially get their Ethereum Classic firmware loaded, but we have to wait for them to start mining, and then we have to wait for them to start generating the newly minted Ethereum Classic coins, and then prices to start being set from there. And we don't know what these farms that are running them are sitting on as far as their power costs and what their bottom lines are, right? So I highly doubt they'll be selling at a loss. And so it will probably come up just in relation to it, but by how much is still yet to be seen. A doubling of the price of Ethereum Classic here just because of this is a potential. But I don't think you would still be well served by mining with GPUs right now. I could be completely incorrect and it's not financial advice, but I wouldn't put my coins on there quite yet, right? So that's kind of where I'm at. As far as the hash rate, it really hasn't moved much on Ethereum Classic since the article was written. You know, we've gone up from this 30 terahash range up to the 42, 43 terahash range. We have a potential for another 20 terahash to start coming online here over the next week. And we have a price decrease of Ethereum by 15% as well following it. So this doesn't bode well. And we'll see more of that when we start talking about mining profitability right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. And welcome back, everybody. I do have basically here I need to get this out right now. So let me get you guys, we have breaking news today as well surrounding mining in Texas that we need to talk about too, because the smaller miners are really getting hurt by these energy price increases, but the large miners are getting incentives, and it's very frustrating. But let me show you guys exactly what's going on here so you get an idea of what's happened. So we have a report here that essentially a Texas cryptocurrency mining business got $9.2 million to cut the power last month for grid stability. Riot Blockchain mines and hosts Bitcoin. In July, the state power grid manager gave Riot $9.5 million in power credits to cut back on the production during peak electricity demand. As energy demand in ERCOT reached all-time highs this past month, the company voluntarily curtailed its energy consumption in order to ensure more power would be available in Texas. They curtailed a total of 11,717 megawatts in July, said the CEO of Riot. The fact sheets show 1 megawatt can power 200 homes during peak demand. ERCOT gives energy credits for certain power users to curtail activity. Those credits can be used against future power bills. Curtailing the company's power consumption reduced Bitcoin production by an estimated 21% in July, but also significantly reduced Riot's power costs for the month. By providing power back into the ERCOT grid during periods of peak demand, the company estimates that power credits and other benefits from curtailment activities totaled an estimated $9.5 million, significantly outweighing the reduction in Bitcoin mined, less said. Now, this is great. We talk about stability of the power grids but with, the Bitcoin miners, and this can be a huge positive. Where I find a little bit of frustration here is that these fees, this curtailment that they're paying out these large miners, are hitting all the rest of us as they're charging us more for power because they're paying them. And if I reduce my power consumption, it doesn't give me any sort of kickback. Now, I know there are some deals that I need to work to make sure that that works out more, but there's a little bit of frustration there from my perspective. But saving $9.5 million in power credits is pretty insane. So I figured I'd bring that up with you guys. Let's get into mining profitability for the day, though. We currently have about 4.3 gigahash online with 4.12 gigahash over the past 24 hours. You can see our tick up actually was last night right around here. We were doing some maintenance and so on. So we have a 0.07 estimated ETH for the next 24 hours, which would be $121. And the rest of my mining power is somewhere else. All right, don't worry about it. Let's talk about the RTX 3090 profitability on what to mine. We have ETH hash at 119. And then, of course, we have our 10 cents a kilowatt hour plugged in and corrected hash rates for ZIL hash, Kapow, ProgPow, and Firo proof of work. Right now, that still puts Ethereum in number one slot at $3.02 a day in revenue and $2.25 a day in profit. We have Cero at $2.97 a day in revenue and $2.18 a day after power. And Neoxa at $2.70 a day in revenue and $1.90 a day after power. We have Ravencoin at $2.67 a day in revenue and $1.87 a day after power. And Conflux at $2.37 a day in revenue and $1.58 a day after power. We have Firo at $2.26 a day in revenue and $1.51 a day after power. And we have Flux at $2.18 a day in revenue and $1.49 a day after power. Scrolling all the way down, we do have Ergo still sitting in last place at $1.85 a day in revenue and $1.22 a day after power. Not technically last place, just last place for what we typically cover, because the rest of these are just things that we typically consider, not profitable enough to really matter right now. That being said, if we take a look at the Bitcoin hash rate on the network, we're down 10% over the past 7 days on price, and the hash rate has remained relatively stable at 233 exahash a second. If we take a look at Ethereum, we should see the dip of about 30 terahash. This is down to 927 terahash a second, and the price has gone down by 10%. At this time, though, if you're on GPUs, you do have this potential of basically making a little bit more on Ethereum right now, running up to the merge, thanks to, of course, all of these ASICs getting kicked off. So GPU mining for the win, as I see it. If you were sitting on those ASICs, I think things looked pretty for you for a little bit, but, it's time to pay the piper. Or pay. Is that how it goes? Something like that. Flux is at 1.54 mega solutions a second. Over the past 7 days, it's actually still up by 3.78%. So Flux is actually against the rest of the market right now. So that's something to take into consideration. That being said, the hash rate has also dropped a little bit. Remember, we were at like 1.7 mega solutions a second on the pools, and we're about down 0.2 mega solutions a second. If we take a look at Ravencoin, we are at 2.5 terahash a second with a huge spike here for some reason. Look at that. Weird. And let's go ahead and take a look at Ergo. And for Ergo, we are at 12 terahash a second with no real change in the difficulty. However, Ergo over the past week is also going against the grid, against the rest of the market, and is up 18% for the past 7 days. Are you guys noticing a pattern here? What coins are up? GPU mineable coins are up. And they're going against the grain. This is positive news, guys. This is what we want to see. Also, we can take a look at Caspa again, because we have been covering this a little bit more. It's still up over the past 7 days by 241%. And right now, the network hash rate is 29 terahash on the pools. But that doesn't tell the whole story, because it is still very popular to solo mine Caspa, which is at 53 terahash a second. So that's one to take a look at as well. And you won't find any of the calculators reporting that yet. So that's my hint and tip to you guys. Now, mining pool profitability for the past 90 days, ZET in first, Ether mine in second, F2 pool in third. Last 60 days, ZET in first, F2 pool in second, Crux pool in third. Last 30 days, ZET in first, Nano pool in second, F2 pool in third. Last 21 days, ZET in first, Nano pool in second, Hivon pool in third. Last 14 days, ZET in first, F2 pool in second, Hivon pool in third. Last 7 days, F2 pool in first, Crux pool in second, Hivon pool in third. And for the last 3 days, Crux pool in first, F2 pool in second, Hivon pool in third. For the last day, Crux pool in first, F2 pool in second, and Hivon pool in third. Taking a look at Asic miner profitability, the Antminer E9 has dropped to $60 a day. The Antminer L7 comes in second, basically, at $20.39 a day. And the Silicon A11 still here at $35 a day. But yeah, there you go. And then scrolling down, the KD6 is down to $12.80 a day, with the S19 Pro down below $5 now today at $4.56 a day on Digibyte. Let's get into questions and answers. Remember, super chats are never required, always appreciated, and the first to be answered because they're the easiest to read. Next, if you tag @SonOfATech, it will highlight the message orange and I will be able to read it easier, so please do that. Super stickers are the best for the algorithm, or at least that's what I've been told, and holy moly, we have 476 concurrent viewers today. I want to thank everybody that stopped in, all the regulars, the 300 or so of you that are regulars. Thanks for showing up here every day. And for the additional newcomers for the day, welcome. I hope you enjoyed the show and you learned something useful for your own mining operations or investing operations, etc. Mike Wright says, @SonOfATech, why are they not sending letters to all service providers for all service sector jobs and manufacturers to see what their environmental impact is? Because this is specifically an attack on crypto mining. I mean, it has been very clear that that's what it is. They do not ask for environmental impact of Amazon and their data centers. They do not ask for environmental impact of Google and their data centers. They do not ask for environmental impact from Microsoft and Azure and their data centers. It is very clear that the main push behind this would be because they have a lot of money and influence over the government, and the crypto miners do not have as much, at least at this current time. In smaller countries, I think that's a little bit different. If we were going to talk about El Salvador, there's probably some benefits there and so on. But it's pretty clear that that's what's going on, that it is an attack on specifically crypto mining. They do see, in my humble opinion, the fact that crypto mining and proof of work does make it a lot harder to regulate and basically manipulate the markets and stop it, add in sanctions, all of that. We talked about this, the benefit of essentially proof of work in that nature, where you have a censorship problem once you go to proof of stake and you are basically hosted in one of these big cloud services that do not get letters involving environmental impact, because those specific ones are in the back pocket with the government, and they can basically go ahead and utilize that to not only manipulate markets, etc., but also impose regulations and sanctions, right? So if you have like a form of cryptocurrency that is easier to manipulate and regulate, I think that you will try to push for that one if you are currently in power. If they try to censor, a transaction that happens that's proof of work, and they get all the mining pools on board, there still can be a single miner out there that says, no, I'll go ahead and accept those transactions and run it, and basically be able to process that transaction for you. And this was a discussion that we had earlier in the week surrounding Tornado Cash, right? So you guys can go back and watch that video and that live stream if you want more information on Tornado Cash and as well as its impact on, and as well Ethereum's impact on Tornado Cash and censorship once it moves to proof of stake. KG says, as son of a tech, ETH with 700 mega hash is 817 a day, but 2 miners don't have a pool, so they won't promote it. Just saying. So ETH is 817 a day, which would be better than the, Callisto that 2 miners was. So thanks for the tip there. I still think that it's going to be ETC that most of these guys move to. Vamp Mining says, as son of a tech, do you recommend solo or pool mining on Caspa? I have 1.5 gigahash on ETH and wanted to send some hash rate powered to Caspa. So you have a couple options. You could dual mine, but you're going to significantly increase the power on the cards if you're dual mining ETH in Caspa, and it's not extremely reliable. Now, as far as mining goes, it will depend on the type of cards. 1.5 gigahash on ETH doesn't translate to Caspa pretty much at all, because Caspa is the heavy hash algorithm, is going to be core focused. In fact, it barely uses any memory at all. So when you're looking at the hash rate conversions, it's really wild, right? Like your 60 mega hash a second RTX 3070 is going to do better on Caspa than a 5700 XT that does near 60 mega hash a second, because the 5700 XT is not going to have as high of a core clock. So you also get advantages off of, for example, like the 2080 Ti or the 3080 Ti, even because of that increased hash or that increased core clock on the Ti models. So your 3070 Ti in theory is going to do better on Caspa than 3070. Now there are also a whole bunch of different miners that are out for Caspa, and there are better ones and worse ones depending on the card and so on. So this is the point where with a new coin like this, you're going to want to go test, right? You got to test, the miner, does it do what you want it to do? Is it the most efficient miner for the card you're running? Because they do vary quite widely. In fact, the 1063 gigs that I have are actually doing like 160 mega hash a second on Caspa with BZ miner, but on LOL miner would do 60 mega hash a second. So that's a huge difference. You need to go play with all of the different miners and go ahead and figure out what's going to be best. The other thing that comes into play, of course, is the miner support for node mining, which you would need for solo mining, versus stratum mining, which will play a part here, because the stratums for Caspa right now are very, very spotty. They're not extremely reliable. You have K stratum, which has, a varying ping between 1 and 800 milliseconds, which is wild. And then you have Caspad stratum, which just stopped working on me the other day. So I kind of went back to node mining. Well, BZ miner is the only thing that really supports node mining, that or the official Caspa miner, which is actually a little bit behind on efficiency. So BZ miner is what we went with. And these are all going to kind of be the factors that play in. So if you use LOL miner, for example, LOL miner will require a stratum for your solo mining, or your node for solo mining, right? Or you could just go to a pool. But, these pools are also using these different, these two stratums, because there are only 2 stratums available. So the efficiency of pool mining for Caspa is significantly lower than the efficiency for solo mining on Caspa, because you can mine directly to the node. and the pools have to set up stratums. So you end up in a position where you will earn significantly less depending on the amount of hash rate, right? If you're significantly low on hash rate for Caspa, maybe a pool's still better. But for the most part, you are taking a pretty big hit, not only just in fees for mining to a pool, but just from the performance of the pool compared to the performance of mining to a node for Caspa. Now that's everything that I can give you on Caspa right now. And obviously I'm working on guides and how-tos for all of that stuff for you guys. But there is a lot of nuance surrounding it. This is a new coin, and there's probably going to be a lot that changes with it too. We already know that they are going from, the Go programming language from Google over to Rust, and that is probably going to change a lot. There's probably going to be things like getting everything moved over, updating your nodes, updating your wallets, all of that. So be prepared. This is not an easy endeavor to hop into Caspa right now. You're going to have to be thinking on your feet. The Yogro, thanks for the $10 Euro super chat sticker. Wasted Trash Panda, thanks for the $5 super chat. Says, like that Tom McDonald song, people so stupid, that's why they invest in Solana. This stupidity is a reflection of our mindless society. Nakudo the Gamer, thanks for the $1.99 super chat sticker. And Ted Park, thanks for the $4 Canadian super sticker. Now, I did also hear on the Canadian portion of things, the $30,000 limit does not apply to mining. My question would be, is if you mine $30,000 worth and then you buy $30,000 worth, but you sell the $30,000 worth of the mining, do you get that $30,000 credit to then buy another $30,000 worth of whatever altcoin you're doing? That would be kind of interesting. Daniel Kemper says, Ask Tech, what happened to markets today? Well, we talked about that earlier in the show, and primarily the markets are very nervous about the interest rate hikes after the FOMC meeting. But we won't know if those are actually going to happen or at what level they're going to happen. I'm pretty sure they're going to happen. But at what level they're going to happen until September. Actually, probably like September 20th. So September is going to be a really interesting month. I think we're going to see we're going to have, huge potential for a lot of craziness within not only crypto, but the entire world in general, and crypto mining specifically as well, because of the merge with Ethereum, or for Ethereum to proof of stake. Brandon Gasper says, Ask Tech, any thoughts or advice about possible last second post-merge gas fee spikes as everyone pulls out from mining pools? Most of the gas fee spikes come from large projects that were doing NFTs back in the day. And the fact of the matter is that that is probably not going to happen again before ETH moves to proof of stake. I don't see there could be a huge buying time possibly on Ethereum, but it's not going to drive the fees up like these NFT launches and DeFi did in the past. At least I wouldn't expect it to. JKK says, hey, at son of a tech, I'm getting an error in a rig, aborted core dumped. It doesn't even start mining. Any ideas? I changed the miner and it does that now. Even the previous flight sheet gets the same error. I don't know exactly what that error would be necessarily. I'd have to look it up. I haven't had that error personally. Maybe somebody in chat can help you out. Carlos says, Ask Son of a Tech, thanks for all the free content. For sure, my man. You can always check out sonofatech.locals if you want to support me directly. Definitely become a member on sonofatech.locals.com as well, because that's where I'll be able to reach you guys in the case that anything gets a little weird on the crypto side for YouTube. Leia says, Ask Son of a Tech, any updates on using a GPU for Polygon Layer 2? The guy, so I was supposed to do the interview yesterday, and unfortunately he got sick, and so he is rescheduled for next week. So next week I should be getting more information on basically ZK rollup, on the ZK rollup proofs for GPUs. Patrick says, Ask Simon Tech, smash the like button. Thanks for the reminder for everybody. Tomac says, at Son of a Tech, I can't watch the show live every day, but I watch the videos when the kiddos are off to bed. Thank you, good sir. And hello from the US to Canada. Kevin Smith says, Ask Son of a Tech, it's not absolutely insane. It's simply insane at the end of the day. John English says, at Summit Tech, those data centers collect data on us, so it's definitely hands off. Yeah. Queen of Random says, Ask Tech, how are you checking latency for Cash Stratum? Are you using the latency time listed in LOL miner? I was seeing up to 20 milliseconds in the miner, so not too bad. No, so you need to use the Stratum ping tool from 2 miners. I have a guide on using the Stratum ping tool, and you will just essentially put in, instead, go ahead and put in your, the IP and the port to the Stratum, right? So you'll put that in just like you would a mining pool, control save, run it, and it'll give you the ping times. Nakudo says, at Son of a Tech Lurker here, question, should or could you run a Caspa node off a machine mining through Hive OS? You could technically run off of Hive OS. You would have to do a custom implementation. The LOL miner already has a guide for running the Stratum in Hive OS. I wouldn't recommend running the node because you are going to be running a wallet as well with the UTXO index, meaning that you will have a wallet on there. And the fact of the matter is that Hive OS is not what I would call secure by any means. In fact, most of the attacks that happen on miners are through Hive OS. That's not as big of a problem if you're just mining because you can just reload the OS. That is a problem if you're running a node that has a wallet on it with all of your funds in it. I would not do it. It is possible because it is just a Linux distribution. I just wouldn't do it though. Detroit says, at Son of a Tech, you can solo mine cast through Woolly Pool. So solo mining cast through Woolly Pool is still going to put you through a Stratum. So you're not going to make the same amount that you would mining to your own node for Caspa. The Yo Groove says, at Son of a Tech, I'm getting a server spin up some nodes for different coins to be able to explore solo mining. Would this server be sufficient? A R710 with 2 Xeon L 6 core 12 threads. Yeah, they're a little bit older. But it would be sufficient to run a few nodes off of it. The only place where you're really going to run into trouble with that particular server is going to be running something like Mining Core, which a lot of people use for solo mining Ergo, for example, as Mining Core does use 8 cores. And the thing about it is that it also prefers higher performance cores, and those processors are a little older. I know this because I have a Dell PowerEdge R720 XD, and we had significant latency issues with the mining core loaded onto a VM. So I took that off of there and actually put it on a bare metal system that's running it better. So yes, that's good. It's going to be a good learning experience, probably a good entry point into spinning up an ESXi host, like a virtual machine host, and building out, different nodes on there. It's going to be great. Your nodes are going to run fine. Where you're going to run into trouble though, like I said, is Mining Core in particular for Ergo. So, yes and no, there are caveats to all of that, right? Tomex says, at Son of a Tech, 30K in Canada is for Newton exchange only. Not sure who's pressuring them to do this, but safe bet would be the government. Well, that's the one that's implemented it, right? The question will be, at what point does that get applied everywhere else? Crypto or Die, thanks for the $4.99 super chat, says, keep up the good work. My power bill just went from 12 cents to 15 cents and about to go up again. Thinking about putting solar on my roof. Any thoughts? I mean, solar is an option, but it's still extremely expensive. So I haven't priced it out in about a year, but it was too much for me to really to afford. Andrew C, thanks for the $1.99 super chat, says, sun's out, guns out. Yes, sir. Always hot here. Raptor Nodes at Son of a Tech looking for group. What's up, Chad? XDX says, what's up, Son of a Tech? It's Neoxa or Neoxa. It's with an E. I don't know. Ted Park says, ask Son of a Tech, I'm in Alberta. I hadn't researched the 30,000 rules yet. I'm not buying or selling that much anyways. So just to be safe though, just to be clear for everybody though too, is like, just because it doesn't affect you yet doesn't mean that you shouldn't be worried about it, right? Daniel Ring says, Ask Simon Tech, I got dual CAS on Windows, but can't get it to work on Hive on LOL miner. You got dual CAS on Windows. What do you mean dual CAS? You got the node? So like I said earlier, if you're going to be mining directly to the node, it needs to support node plus TCP, and that is only supported by BZ Miner and the official GPU miner for Caspa right now. Andrew C says, Ask Simon Tech, just a heads up, you're using the word insane way too often after reading that one guy's online news article. Jacob Twitchell says, Ask Simon Tech, have you ever had a problem with Hive recognizing new GPUs? I got an EVGA for the Win 3 3080 Ti, and it recognizes as a 3080 Ti, but no specs and won't mine. Already checked the different risers in PSU. Did you check it working on Windows? Are you able to open GPU-Z and get all of the data? Detroit says, Ask Simon Tech, can you run CAS node in Hive? We already talked about that. Leonardo says, LO miner has been really unstable for dual mining ETH plus Caspa. I haven't found a reliable ETH plus Caspa setup yet. BZ Miner was the closest, but it was still pretty rough. You ended up like on one rig, I waited for like 3 hours before it started mining both, and then cards were still falling off. So I'm not currently doing the dual mining thing. It's just not reliable enough. So I've had the same experience on multiple miners. Mid G says, Ask Simon Tech, do you think that ETC will be profitable for GPU miners? ASICs are much more efficient. I think it would be best if ETC switches to a GPU only algo. I don't think that ETC should switch to a GPU only algo. I think they should take the free security from the ASICs, and GPU miners can move to something else. That being said, no, I don't think right now that you should be mining Ethereum Classic with GPUs. ER Ted says, at Simon Tech, I just tagged you on Twitter about an article saying that Cardano Ford is broken bad. Ah, okay. So breaking news there real quick as well. Let's go ahead and snag that. I'll try to pull it up here. Let me see. That's a giveaway. I don't see it, but we'll pull it for later on, I guess. Thanks for the heads up. Your keys beast. All right, Ted, gotcha. Andrew, thanks for the $5 super chat. To keep up the good work. I'm trying, good sir. Village BC says, at Simon Tech, just buy Bitcoin above 30K and then switch to altcoins of your choice. But that won't work in those exchanges that implement it. Because when you buy it, it just says the equivalent when you're swapping. We read all that yesterday. Mike Stewart says, ask Simon Tech, how do I get a hold of your merch? The only merch that we have available right now is just the merch that you can buy below the channel on the little slide thing. And it goes through Teespring. Get the premium shirt. I didn't like the regular shirt, even though it's cheaper. The Yo Grove says, ask Simon Tech, thanks. My solar is saving me around €400 a month. I look at it as an extra miner. There you go. Ted Park says, ask Simon Tech, I'm worried about the restrictions on crypto for sure, as well as the restrictions that little Castro has his merry men are implementing. Oh yeah, I think I know who you're referring to. Crypto in Tech says, ask Simon Tech, can I run Caspa node on a Raspberry Pi 4? You'll want the larger memory version, and you can, and it should run just fine, yeah. Vassal says, at Son of a Tech, what would you recommend to mine instead of Ethereum Classic? You could pick Ergo, Caspa, Flux, Ravencoin if you have the power and the cooling for it. Daniel Ring says, ask Simon Tech, sorry I shortened my questions like we're texting in 08. There you go, no worries. Vassal says, ask Simon Tech, what would you recommend to mine instead of ETC? We just said that. All right, boys. Thanks for watching today. Be sure to hit the like, comment, subscribe, and notification bell down below. I'm working on more and more content. It's just been a little bit slower than normal because it's been very busy. We got the kids going back to school, and we got all of the crazy events surrounding that. So we should be good to go here soon. Thanks for watching once again, and I'll see you next Tuesday.